All right, let's dive into Nazara Technologies. You wanted the scoop on their latest performance, right? Specifically, that Q2FY25 report.
Yep.
We've got their investor presentation, and hot off the press is a release about their recent board meeting, so much to unpack.
Lots to dig into.
Before we get lost in the numbers, quick recap. Nazara, they're a big deal in the gaming and sports media scene.
Yeah, operations across India, the Middle East, Africa, even parts of Europe now.
Not exactly a small operation.
And what's interesting is they're not just laser focused on one type of gaming. They've got their hands in esports, mobile games, even a growing ad tech presence.
Diversified, you might say. And speaking of big moves, their financials this quarter definitely raised some eyebrows. Almost INR 900 crores raised through that preferential equity issue.
Yeah, a lot of people are wondering about that. Like, why raise so much capital?
That's a good question. What's the thinking there?
Well, it's a pretty clear sign that Nazara is gearing up for some serious growth. Their investor presentation, it suggests this funding is going to fuel both organic expansion of their current businesses and a string of strategic acquisitions.
So not just short-term thinking.
Not at all. They're playing the long game here.
Big picture stuff. Okay, let's zoom in on those Q2 FY25 numbers. Revenue of INR 318.9 crores. A decent jump of 7.3% compared to the same time last year. And EBITDA landed at INR 25.2 crores.
Right.
For the first half of FY25 overall, the revenue comes to INR 569 crores. EBITDA at 50.1 crores.
But
There's a but coming.
both of those EBITDA figures actually down compared to last year. There's a couple of things at play there.
That new GST regime in India, right? Specifically impacting their real money gaming segment. It's a bit complex, I know.
Yeah.
But how's it hitting their bottom line?
So the way the new GST rules are structured basically means real money gaming companies have to pay out a way bigger chunk of their gross gaming revenue as tax. It jumped from 13.4% to, get this, 46.7%. Yeah, this has hit a lot of the smaller, mid-sized companies really hard. And while Nazara has resources, it's still a hurdle.
The challenge to overcome, for sure. Speaking of challenges, let's talk about that big move they made, acquiring a major stake in PokerBaazi, one of India's top online poker platforms.
Right.
Their biggest investment yet, INR 831.5 crores, for a 47.7% stake. What's the strategy there?
Well, it shows their ambition. They want to dominate not just esports, they're already strong there with NOD dumbing gaming, but also that rapidly growing skill-based gaming market in India. It's a power play. Could really pay off if they can leverage those synergies.
Like building a whole gaming ecosystem. And they didn't stop there. Full ownership of Kidopia, that top kids app in the U.S., emerging paperboat apps, Kidopia's parent company, right into Nazara Technologies.
Right.
A lot going on, trying to solidify that core gaming business.
It makes you wonder, though, can they manage such a diverse portfolio effectively, integrating all these different companies, cultures? It's tricky, especially across different regulatory environments, multiple continents, too.
Yeah, it's more than just buying them up. Got to make them work together. And on top of all that, they've launched this organized decentralization approach, setting up centers of excellence, or COEs.
Right, focused on things like data analytics and user acquisition.
Explain that a bit more. Those COEs, what do they do?
Essentially, they're these internal hubs of expertise that support different parts of the business, boost both the strategic planning and day-to-day operations. So, like, a data analytics COE might help a game studio understand player behavior.
Okay, get those insights.
Right, and then improve engagement. The user acquisition COE uses that to create more effective marketing campaigns.
So no more working in silos. Everyone's got access to the right expertise. Could be huge as they scale up with all these new acquisitions.
Exactly. But the question is, will organized decentralization actually deliver tangible benefits? It's a new approach. We'll see if it lives up to the hype.
We'll be watching that for sure. Okay, we've got a sense of Nazara's overall strategy, some of those big moves they've made. Let's look closer at how their different segments are performing. Starting with gaming. Their bread and butter, right?
It seems to be.
One of their star players, Kidopia, that US-based kids app, hugely successful, consistently ranking as a top-grossing app. And they're running on a subscription model focused on gamified learning for kids.
What's really intriguing about Kidopia is this plan they have to integrate popular global kids IPs into their platform. This could be huge for organic subscriber growth. Like, imagine if they brought in beloved characters, stories from popular children's books, movies, TV shows.
Tapped into those fan bases.
Exactly. It's a win-win for Kidopia A&D, the IP holders.
Smart move. Give them an edge in that competitive kids app market. And it's not just Qdoba. They've also got Fusebox games, making waves with those interactive story games based on popular TV IPs. We've even got a Big Brother game in the works, set to launch in 2025.
Right, and we can't forget Animal Jam, another powerhouse. The #1 grossing kids app for ages 9-11 in the US. And they're planning to ramp up user acquisition spending to grow it even faster. They clearly believe in the kids' gaming market, and with these three strong players, they're well positioned.
Seems like they've got that market figured out. Real money gaming segment, though, hasn't been quite as rosy, that GST regime, as we mentioned.
Definitely had an impact. While customer engagement stayed fairly steady, that increased GST payout has eaten into their profits. The smaller and mid-sized companies are finding it tough to adapt, and even for Nazara, it's a situation that needs careful handling.
So how are they planning to tackle that?
Well, they're doubling down on operational efficiency, focusing on better products, streamlining costs, all to try and improve profitability. It's textbook adapting to those regulatory changes. Will be interesting to see how effective those measures actually are.
A real test for them. Okay, so that's gaming. Let's shift to esports, a major growth driver for Nazara. And their subsidiary, unaudited Gaming. They've been making some serious waves, internationally especially.
Yeah, they've been hosting, broadcasting some of the biggest esports tournaments worldwide, building partnerships with the big players in the industry. But what's really interesting is this move beyond just traditional gaming and esports. They're expanding into broader youth entertainment across different formats and geographies.
That's a big shift. What does that look like in practice?
Well, they're recognizing that the lines between gaming and other entertainment, they're blurring. OTT platforms, streaming services, social media, it's all intertwined with how young people consume content, interact with it. So NOD is positioning themselves to be a leader in this evolving landscape.
So it's not just about hosting tournaments anymore.
Right, it's about creating whole entertainment ecosystems for young audiences, catering to all their interests.
What sorts of things are they actually doing to make that happen?
Things like, for example, the BGMI Masters series and All That Matters. Drawing in massive audiences, establishing NOD as a major force in global youth culture. They're taking that esports expertise and expanding it into music, fashion, even content creation, basically building a platform connecting young people with their passions.
Really smart approach, not just riding the wave, but shaping the future of youth entertainment.
Exactly. They have the IPs, the partnerships, the vision to really dominate this space.
Now, onto their Sportskeeda platform.
Oh.
Solid growth there, both in revenue and EBITDA.
They're ranked in the top 10 U.S. sports news websites now. That's impressive.
Mm-hmm.
And what's really interesting is they're applying that same playbook that made Sportskeeda successful to their newer acquisitions. Soap Central, for example, that online soap opera community.
Right?
Promising early results there suggest their formula can be adapted across different entertainment areas. Fascinating to see how they're leveraging their expertise to create value in such different businesses. And speaking of applying a successful formula, let's look at their ad tech business, Datarx. They acquired S&T recently, that UK-based growth marketing agency, positions them as a major player in global digital advertising.
Big move.
Yeah, and they're strategically moving toward higher margin business, which has already led to better gross profit. They're laser-focused on profitability across all segments, not just gaming and esports.
Strategic growth and profitability. Key things to watch as Nazara continues on this ambitious path.
Definitely. On to the next part of our deep dive. So we've seen Nazara on this aggressive growth path, lots of acquisitions, strategic investments, especially in gaming and esports. But what does it all mean for the company's future?
Yeah, that's the big question, right? They're not just randomly buying companies. You're building a portfolio, brands, IPs, targeting a global audience, especially young people. Fascinating strategy, but there are risks.
Oh, absolutely. Integrating that many businesses, it's a challenge, especially with different regulations to navigate. The GST situation in India, for example, adds another layer of complexity. Their success depends on managing all these moving parts effectively.
A lot to juggle. So let's break down their revenue a bit. Where's the money coming from? In Q2FY25, esports was their biggest earner, brought in 57% of the total, gaming at 36%, and ad tech trailing behind at 7%.
Right. And geographically, there's a big shift happening towards international markets. North America now makes up 39% of their revenue, followed by India at 31%, and the rest of the world making up the remaining 30%.
That North American expansion makes sense. Qdoba, Animal Jam, they're doing well there. The U.S. market Lots of potential for digital entertainment, especially those kids' apps.
For sure. But here's where it gets interesting. When you look at EBITDA, the picture changes. In Q2, gaming contributed 66% of their EBITDA, while esports came in at 28% and ad tech at just 6%. So while esports is driving revenue growth, gaming is actually more profitable right now.
Interesting. It's like they're balancing, trying to maximize both revenue and profitability across those different business units. Taking a long-term view, building something sustainable, not just chasing quick wins.
Smart approach, especially in such a competitive, fast-moving industry. Okay, let's dig a little deeper into the financials. Look at their balance sheet as of September 30, 2024. Total assets grown significantly to INR 2,974.3 crores, up from INR 2,761.8 crores in March 2024.
A big jump. What's behind that growth?
A lot of it comes down to goodwill and intangible assets, more than doubled since last quarter, mainly because of all those acquisitions.
Right, makes sense. But all those acquisitions that impact their cash reserve.
It has. Cash balance dropped from INR 1,458.3 crores in March 2024 to INR 862.7 crores in September. They're investing for growth, using that cash to acquire businesses that fit their long-term vision.
So short-term liquidity for potential long-term gains. One thing that caught my eye, though, their debt levels. Those have gone up too, right? All those acquisitions.
Yeah, that's something to keep an eye on. Managing that debt carefully, it'll be crucial, especially as they continue investing heavily in growth. It could become a burden if they're not careful.
For sure. Okay, so we've got assets, liabilities. What about cash flow? How are they managing that inflow and outflow?
Well, in the first half of FY25, their cash flow from operations after taxes came in at INR 26.4 crores, significantly lower than the INR 90.9 crores they generated in the whole of FY24.
That's a steep drop. What's causing that?
The biggest factor, their increased investment in acquisitions. You see it reflected in their cash flow from investing activities. They've spent a whopping INR 577.6 crores on investments in just the first half of FY25.
Wow, that's a lot of cash going out. It seems like that acquisition strategy is really impacting their cash flow, at least in the short term. The question is, will those investments pay off down the line?
It's the gamble they're taking. Too early to say for sure. Now let's switch gears. Another important metric, earnings per share. For the first half of FY25, their basic and diluted EPS for continuing operations stands at INR 6.07.
Lower than the INR 10.28 EPS they had for the whole FY24. Is that also tied to the acquisitions?
Likely part of it. Acquisitions often cause those short-term fluctuations in earnings, especially as companies integrate new businesses and deal with all those associated costs. We'll need to track their earnings over the next few quarters to see how things shake out, whether those acquisitions start boosting their bottom line.
Sounds like they're in a transition phase right now. They've got the revenue growth, clear focus on profitability, this bold acquisition strategy. But they're also facing some challenges. They had GST impact, the rising debt levels. It'll be interesting to see how they handle all of it.
Absolutely. It's a balancing act. Their future success depends on executing those ambitious growth plans while managing the risks. Speaking of strategic moves, let's discuss that merger of Paperboat Apps with Nazara Technologies announced this quarter.
Right. Big news. Expected to finalize on October 1st, 2024, pending approvals, of course. A major step towards consolidating their core gaming business.
Exactly. Streamlining operations, creating more fungible cash flows, gives them flexibility for future growth.
Bringing all the key players under one roof, creating a more cohesive force in the gaming market. And integrating Qdopia, which is already cash flow positive, directly into Nazara Technologies, strengthens their financial base for future investments, acquisitions.
Exactly. Smart moves in the present, positioning themselves for a strong future. But it's not just about internal consolidation. They're also looking outward at the broader industry trends, the competition. Gaming and esports, they're constantly evolving. New technologies, platforms, competitors popping up all the time.
Can't stand still in this world. How is Nazara staying ahead of the curve? How are they staying competitive?
Innovation and diversification, that's their key strategy. That move into broader youth entertainment, like we talked about with NOD's Mind Gaming, shows they're adapting to what consumers want. They're not focused on just one thing. They're casting a wide net, trying to capture the attention of young audiences across all sorts of platforms and formats.
And that organized decentralization approach with the COEs, that's all about collaboration, sharing knowledge across their different businesses. Seems like they're fostering a culture of creativity, agility, strategic thinking. all essential for success in this industry.
They're not just reacting to changes, they're anticipating them, trying to be leaders in the future of gaming and entertainment. Now, let's zoom out even further. Think bigger picture. Nazara's global reach is growing, especially in youth entertainment and esports. What does that mean for the overall gaming and media landscape?
That's a great question. Exciting to think about the ripple effect their success could have.
Well, for one, it could inspire other companies in emerging markets. They might adopt similar strategies, could lead to a more diverse, more competitive global gaming ecosystem, challenging those traditional powerhouses from established markets.
Like they're paving the way for a new wave of global gaming giants, proving that innovation, success, it can come from anywhere.
And their focus on youth entertainment, that could have a huge impact on how media and entertainment are consumed, experienced by the next generation. They're at the forefront of a cultural shift. Their decisions today could shape how we interact with entertainment for years to come.
It's amazing to think about how their current moves might influence the future of the whole industry. They're not just building a
Yeah.
business, they're potentially reshaping an entire landscape.
Exactly. That's what makes following their journey so fascinating. Now, before we move on to our final thoughts, wrap up this deep dive, there's one more intriguing detail. Could be a turning point for Nazara's future. They're exploring new technologies, venturing into uncharted territory.
Oh, this sounds interesting. Tell me more.
They're dipping their toes into the metaverse, Web3, even AI, risky areas, unproven, but they could be game changers. If Nazara can leverage these technologies successfully, could take them to a whole new level.
So they're not content with just being a leader in the current gaming market. They want to define the future of how people play, connect, entertain themselves.
Right. Ambitious vision. It'll be fascinating to watch how these explorations pan out over the next few years. Will they create those immersive, interactive experiences that blur the lines between gaming, entertainment, real life? Only time will tell, but it's an exciting prospect.
Like watching a high-stakes game unfold in real time. And with Nazara leading the charge, we can expect surprises, strategic moves, bold decisions in the quarters to come.
We never stand still, always pushing the boundaries. That's what makes them so exciting to follow. Okay, let's wrap things up, move on to our final thoughts.
All right, so we've covered a lot of ground. Nazara's financials, their strategy, the competition, even how their growth could impact the whole gaming and media industry. Quite a journey.
Yeah, definitely. But before we leave our listener with something to think about, let's do a quick recap. The key takeaways from all this. Nazara's Q2FY25, what does it tell us?
Well, they're a company in hypergrowth mode, that's for sure. All those acquisitions, a bold vision for gaming and entertainment.
Right. Their financials are a bit of a mixed bag right now. They've got strong revenue growth driven by that expansion into global markets, especially North America.
And they're making smart moves to streamline things, build a solid financial base for the future. The Paperboat Apps merger, that's a prime example.
Yeah, good point. But there are headwinds too. The GST situation in India, that's impacting their real money gaming segment.
And those acquisitions, all that spending, it's led to higher debt. Something to watch.
Definitely. But maybe the most exciting thing about Nazara is their willingness to innovate, explore new territory. Like we said, the metaverse, Web3, AI, they're already experimenting.
They're not just playing the game, they're changing it. Could be a total reshaping of the gaming and entertainment landscape in the years to come.
Exactly. And that brings us to our final thought for our listener. Nazara's ambition, their willingness to try new things, could they be the company that bridges that gap between the physical and digital worlds for the next generation?
That's a great question. Could they create those immersive experiences that truly blur the lines? Gaming, entertainment, real life, all merging together. I'll definitely be keeping an eye on that.
Me too. Will Nazara become the next global entertainment giant right from India? Only time will tell, but they're definitely a company to watch.
Thanks for joining us on this deep dive into Nazara Technologies. Until next time, keep exploring, keep learning, and keep diving deep into the world around you.